Rio Tinto is optimistic and confident about China. Does Vale share that optimism?
Yes, we do. We believe there's demand is very strong. People may argue if that is because of stimulus or not, but the very fact that what we're seeing on the ground is very positive. We still believe that infrastructure investment will be strong. One Belt, One Road is an initiative which is taking a lot of steam. And we're positive about China, and we never shared the views that the country would collapse. What we saw in 2015, declining steel production by almost 5%, was definitely just one single data point and not the trend going forward. That's not to say that we believe demand will keep growing by 5–6% as we're seeing this year, but so we're more to the view that we'll have a more normalized scenario of mild demand going forward.
The other part of Vale's story is you're trying to broaden your investor base so you can get more exposure to, say, London investors, for example, and not so much focused on Brazil. Where are you in this transition? How quickly do you expect to make this change?
Look, the Vale investor base is composed by people who look at metals and mining and people who look at emerging markets. But the emerging market base has been predominant recently. And sometimes we get upset because we have a lot of coverage on the major minings which are based in London, and people do not talk about Vale. So this is something which will take some time, but we want to position ourselves as a viable investment opportunity for UK investors and metals and mining investors.
But the issue, though, is still, if you want emerging market stock, is Brazil is very tenuous. You have political corruption still running rampant. President Temer's position isn't necessarily viable as well. There's the recession. What's the risk there? How do you operate and attract investors when you have those headwinds?
That's a big problem because people put everything on the same basket. Vale has 90% of its revenues coming in US dollars from abroad. So we're way more exposed to what happens outside of the world than what happens in Brazil. Actually, when Brazil looks bad, it actually benefits us because the currency depreciates and we have lower costs in US dollars. But again, this is an investor relations work that we need to do over and over and over to explain our story.